Rightio. So good morning, everyone, and thank you for taking the time out of your morning to join us. As you've seen, Erin Manhood's joined. Not only she's the regional manager for Prosper, she looks after WA, SA, and the regional manager for Victoria and Tasmania. I say that she's a regional manager, but to me, she's more than that. She's a great friend that I've known, as I mentioned, for nearly 20 years, and it's pretty good. We met at 15, Erin. So it's a pleasure to have you on a call with me again. We've done a couple of these, so look forward to doing a few more as well. Today's session just all about your opportunity to learn some more information on why we're seeing SMEs borrow right now. We'll talk about the lending products SMEs are currently preferring to use. And also, we'll just look into some fantastic new changes we have made to our current product offerings, such as the Guaranteed Prosper Plus pricing, the early payout changes, which is now offering increased client flexibility. And I'll just finish off on talking about our end-of-year campaigns. As mentioned before, and people are joining us now, there will be an opportunity to ask questions at the end of the session. But if anyone has any questions, please don't hesitate to ask them via the chat function, which is on the bottom of the screen. Erin and I will address them at the end of the presentation. So again, thank you. And hopefully after today, you will be more confident than ever with our offerings. And, from that is a great opportunity when you do get off this call. Hopefully you can start looking for some more opportunities out there. Like I said, please, guys, I haven't seen anyone else join, or I can't see the numbers, but if you are joining, we've turned off our screens just due to internet connection problems, and we'll turn them back on at the end. All right, so just moving right along and getting into today's deep dive session. Look, from the biggest driver in our economy recovery is small business. Some of you guys might have seen this before, but we must do everything we can to support and strengthen businesses nationally right now. We need to support small businesses so they can stay in business, create jobs, and more importantly, wealth. Here are some stats from research that we conducted with an independent agency by the name of the RFI Group, who many of you might know through the work they do for the state and federal agencies. The purpose of the research is just to assess the impact Prosper lending has on the SME industry. And as you can see from the numbers, for every $1 million, Prosper lends, it results in the $4 million back into the Australian GDP, effectively 57 full-time jobs annually. So, we're committed to small businesses and driving the economy forward, especially in these challenging times. Examples of this was Prosper pivoting during COVID to offer relief packages to existing customers. And some of you on this call would have rang up asking for help for your clients. To help the customers impacted by the pandemic, we provided over 5,500 COVID-19 related relief packages. The number of customers on partial or full deferrals right now is dropping and continues to drop, and this is a really good sign of the recovery underway. In fact, as some businesses start to see revenues return to pre-COVID levels, we have seen a real strong correlation with demand for new capital. Which takes us on to the next slide. Here, I just want to discuss the reasons, or the main reasons we see SMEs borrowing right now. Times are definitely changing. Coming out of COVID, businesses wanted funds to survive. The majority of the scenarios I talk to now, and Erin as well, they're now tapping into opportunities. They're tapping in for growth. They're looking at expansion. We know that over 3 out of the 10 SMEs want and need flexibility with their finance options. We are seeing so many businesses taking the opportunity and using funds to refresh, rebrand, and more importantly, diversify. Through our history, though, we know that if businesses aren't really operating, and if they aren't growing or trying to grow, they tend to require less capital. And that is what we saw in April to June this quarter, that quarter, sorry. There was lower demand in the market. Now we're seeing improving demand for credit and the green shoots in our customer data. There is a lot of pent-up demand for things like equipment purchases, Many businesses have probably put off replacing equipment inventory over the past few months, but given the reopening of the economy and the government's instant asset write-off extension, and other government grants, this type of investment has started to re-emerge, particularly as we ramp up to the holiday period. In June, SMEs were most likely to borrow in order to maintain their cash flow and pay invoices. Today, SMEs are buying equipment and purchasing inventory, with inventory purchasing increasing significantly over the last 3 months. What we are finding at the moment also is that small businesses are digging deeper every day and finding new ways to deliver their products and their services to, well, not only to survive, but a lot of them are doing it to thrive in this new norm. Many businesses, in essential services, cleaning, building and trade, are still experiencing increased activity and are taking advantage of opportunities to stock up and increase margins in the long term. We're seeing that others, in sectors such as retail, hospitality, hair and beauty, are upgrading their premises to meet the new sanitation requirements, embracing digital and diversifying business models to reach new customers. We're also seeing wholesalers hedging their bets, paying up front for bulk stock so they aren't left short when demand increases as expected. And lastly, on this graph, hopefully you guys are all benefiting from it. We're seeing many businesses take advantage of the commercial real estate opportunities out there at the moment. Hope this gives you some insights into why SMEs are coming to Prosper for funding. So, and happy to, after this call, take some calls and some emails if you need, if you're after some more information on this stuff. On to the next slide. As you can see, we're talking about what lending products would SMEs prefer if needed. As you can see, the business loan is the most preferable option for 1 in 4 small businesses. By choosing the business loan, I guess it gives them the flexibility, which is so vital for so many SMEs out there. Another interesting data point is that 27% of SMEs are using personal finance options for business use. So, I guess we have to ask, is this the right option? And, would they be doing that if they were aware of all the business solutions in the market? So, the main category for using personal funds we find is that when SMEs, the turnover is under 100K annually. But, and we know from our data, when SMEs turn over annually between maybe 500K to $2 million, they seem to be looking for a business loan and a line of credit facilities. That, stuff that we offer is what, that's all we offer really. So, and I guess this is sort of just looking at this slide. It's hopefully something that you guys out there, this is the target market you guys should be playing in and looking in. So, you all have a unique advantage to discuss above these topics with your clients that I've just spoken about and your referral partners. And, we have got the marketing tools to help you educate them on solutions. So, feel free, like I said, we can send you some stuff after this as well on that. The solutions that we've got obviously are all about a business loan and a line of credit. Next, I want to talk about our lending appetite and also, who we're sort of lending to. You might have known, but we have 12 main industry classes, and obviously such as retail, professional services, as you can see there, health, building and trade. And then under the industry class, we have 150 industry categories, and that, ranging from, sort of vets to, like you say there, to religious organisations, for example. Look, building and trade has definitely been our top industry that we've been lending to. And we expect to see the usual spike in November, December, as, trade is definitely trying to finish off certain jobs that they probably have had to let go or just, put on the back burner for a while. And obviously, we do know that, most of them do take a lengthy time off. That might be a little bit different this time around. But typically they're taking some time off, during Christmas to New Year, so getting everything down, and they might have, expenses that they need to cover during that time. Also, we talk about retail. You look at that, in particular, liquor, food, and vegetable retailing have seen a positive impact in their weekly average month revenue, and obviously professional services, doctors, physios, accountants, all that kind of stuff. They've been operating. So we can see that's why they're our top industries that we've been lending to. Look, most importantly, from this slide, we are continuing through and post-COVID to lend to all industries, including hospitality. Especially in Victoria, obviously a lot of hospitality took a hit, but we also know that a lot of them diversified and adapted and probably have never looked any better. We continue to use data from our existing clients, and even from not only from existing clients but also from other states, and having sort of WA and Erin looking after SA, just they've always been open. They sort of didn't even go into lockdown. So we sort of monitor those and see how they've bounced back, and obviously monitoring revenue trends through particular industries. Honestly, guys, there's some great data on this slide. So feel free to take a photo. And I guess over the last 2 months, we have definitely seen stronger settlements for growth opportunities, as I mentioned before. Versus what we used to see, sort of people coming to us just to overcome some short-term hurdles. So I guess in a nutshell, everyone, the worst of COVID is hopefully behind us. I say hopefully. So right now, I'll tell you that we are lending to everyone, and we're lending to small business everywhere. Hope this gives you some insights onto how we're looking at industries when determining who we can fund. Next, I am going to hand it over to Erin, who was going to go through our fantastic changes we've made to our products. So, Erin, over to you.
Thank you, Lee, and thanks everyone for joining. It's great to have everyone on here today. I guess I just wanted to make sure, just really highlight that we understand that everyone in VIC has been through extremely challenging circumstances. And I just wanted you all to know that we really are here for you as a company. So as what we're doing is, obviously myself and Lee, as Lee mentioned, are going to be working closely together. And we're just trying to offer as many additional layers of support for the VIC partners as we possibly can. We've also increased the support that we're going to offer internally. So you'll have a wide range of people with Lee leading the way to be able to reach out to, assist with scenarios. Even if you want some advice or help with your own business, just be aware that our whole company is here to help. So we're coming out of COVID, and as we're coming out, the risk lending space with small businesses has been forever changing. And it was really tough, I think, for lenders across the board, especially with small businesses, because the data was everywhere and it depended on the state, the suburb. Then there's a variety of different grants across the board. So the good news is that we had so much uncertainty, but and Lee and I were just discussing this morning, is what we are seeing is so many positive signs. So I'm based in South Australia, and I can tell you the majority of scenarios that I'm working on at the moment are for small businesses that are looking at opportunities for expansion and growth. And out of Victoria, you're at a different stage to us, but we're starting to see those shoots of opportunities arising at the moment, and it's increasing daily. We recently surveyed over 600 small businesses across Australia, targeting our key industries. And what was really clear is that when they have a preference to what products in market for their small business they'd be looking at, it led the way with the small business loan, as Lee mentioned before, and then second came the line of credit. So what they're looking for is access to funds relatively quickly to be able to tap into an opportunity for expansion or growth for their business. Now, Prosper, for those that haven't had an application with us before, or you're not aware, the Prosper Small Business Loan has a couple of key features that the small business owners really want, and the first one's leading with speed. So coming up to the busiest period of year for a large number of industries across Australia, if we say to them that they had to wait 3 to 6 months to get access to finance, it's simply too long. So what we're doing is, in general, and there's a bit of flexibility in this, but we're approving loans up to 150, generally the same day, sometimes within 4 or 5 hours for clients that are urgent, and then usually within 48 hours for loans that are ranging from 150 to 300,000. So when talking through finance options with your clients, it's imperative for you to consider the cost of time, so the opportunity cost for them with obtaining those funds. There's definitely a wide sweep of finance options in the market, but is what you've really got to put and weigh up is that if your client misses out, as an example, on purchasing stock coming into the Christmas period because you're waiting for 3 months for an approval, which won't come through till next year at some stage, would providing an alternate product. And yes, the rate will be higher, but with the same day approval and flexibility with early payouts suit them better. So it's all about in market at the moment is aligning with what customers wanting and speed and flexibility of what they're saying they want. And that's the two key points, and that comes before rate. So just really keep that in mind with your customers. So as you can see on the screen here, is what we've done is we've recategorized the pricing points for where your customers will potentially land. So we wanted to offer clarity and have clearly defined pricing bands. So we've categorized them depending on the risk of the individual application. Now, when you have a look and you see it starting at 9.9 and going up to 26.5 ASR, it's a pretty broad category, and I totally understand that. And we sometimes get questions around why it is so broad. It's so broad because the risk that we take varies so greatly, and we're dealing with so many small businesses. So if you have a look at the running, it starts at 9.9 and emerging at 26.5. So something to keep in mind is that 1 in 3 businesses approximately close their business in the first year, and that 60% close it within the first 3 years. So if you look at time trading, that's one clear reason that would make a business riskier. So if a business has been trading 1 year versus a business that's been trading 3 years. So the 3 categories we have are running, growing, and emerging. So running are our lower risk clients based on time trading, business trends, consistency, diversification of income. And then we have growing categories. So they're the sort of mid-range. They've been in business potentially between 3+ years. They might have a little bit of ATO debt, and they're a little bit riskier than your running category. And then we have the emerging. So with the emerging category, I'll use an exact example to help guide you with a settlement we had recently. So we had a steel manufacturer. They'd been in business for 13 months. They did have a paid default, and they had consistency on the bank statements, but we couldn't see huge growth. So if you look at the key things that place them into the emerging category, the time in trade is one thing. Now, if you have a look at their credit score, it was lower, definitely on the lower side because of the default and dishonors and stuff that they had on there. So all of those key factors equal higher risk for us. So we still want to be able to lend to clients that are riskier, but we have to price it appropriately. Now, we recently made a huge change, as you can see on the screen, to our early payout structure. So since the introduction of this, which started on the 1st of October, we have seen a huge increase in clients using our funds for short-term purposes. So our early payout option allows for clients to pay out any time they want. As an example, they could take out a 12-month term, 2 months in, they have a significant amount of funds come in and they want to pay us out. That's no worries at all. And the way that it works is whenever they look to pay us out, we take out the remaining principal that's still owing. And then what we do is we reduce the interest component down to only 1.5% of the remaining principal. So I would highly recommend just take a moment after this, speak to Lee, myself, and do some calculations for your clients. Is what we also provide up front. If you've got a client that you're looking to quote, we can do some early payout calculations for them. Especially, and Lee's mentioned this a few times, there's opportunities coming into the busiest period of year for these small businesses. So they want access to funds quickly, but they may want to pay it back when the stock goes down, or if it's a tradie tapping into contracts by February or March last year. So the other product that we offer, it's a business line of credit. So with the business line of credit, it starts at 2,000 and goes up to 100,000. The rates vary from 19.99 to 29.99. Now, what we're seeing is that We saw a spike coming out of COVID in businesses that were wanting line of credit, and then we've seen a slight shift towards the small business loan over the last couple of months, because it's not, they're looking for funds for expansion versus an ongoing facility. But now coming up to Christmas, we're also seeing businesses, they might have slight delays in getting invoices paid, or they're having some challenges with inconsistency of clients paying, and they're utilising the facility. So they might dollars to pay their for their plumbing goods, the Reese plumbing, let's say, and then 3 days later their clients pay. They can pay that money straight back onto the line of credit, and they will only pay interest on the $10,000 for 4 days that they've drawn down on it. Now, Lee, if we just go to the next slide. It's coming. We're going to talk about Prosper Plus. So, as you can see, Lee's internet is slow. So with Prosper Plus, this is some really exciting changes. You know, as they say, it's a little cliche, but in times of crisis equals times of opportunity, and this is what we're seeing a lot of. I think in my time at Prosper, I've never seen so many scenarios come through for the 150 to 300K price range as what we've seen over the last 6 weeks. So there's a few key reasons why this is really attractive to clients, and I'll point them out. So firstly, if you've got a client that wants access to funds, let's say 300,000, you could provide Lee some basic financial information. It could be 1 year's financials. Lee can give you an example of what we would need, and is what we can do without talking to your client or hitting their credit file is give you feedback on the information you provided within usually 1 to 2 hours. Now, something that I'm very proud of is the team that we're working with that provide this feedback. And I have to be careful because this will change, I'm sure, eventually, has 100% accuracy. So when they come back to us and say, yeah, we think that the client can service $200,000 over 2 years, and this is what their weekly repayment will be, so far, it's been 100% spot on. And that's without doing a credit check or anything like that. The other thing that clients are really liking with Prosper Plus is that we can guarantee one of 2 price bands, either 9.9 or 12.9 ASI. Now, the only time that we would offer a different price band is instead of declining a client, if they fall outside of our credit guidelines, but it's still a really healthy business, we could potentially offer a 14.5% band instead of saying no. And with this product here, they also have the opportunity to tap into the early payout. So as an example, we approved unconditionally here in South Australia, a company that does internal linings for residential properties. And they've got huge contracts, just won a tender. They're looking to sign in the next day, and they want to pay us back in March. So that's just an example, and they work out what the total cost of funds is versus how much they're going to make. It pays itself back 10 times over. So there's a few areas. Is what I wanted to share as a last point is just there's a few key areas with Prosper Plus that we're getting the most amount of traction. So I want to share them with you so that when you're talking to your clients, you can really consider these areas. So the 3 are, we're seeing a lot of existing businesses that are wanting to start new ventures in different industries. So as an example, I had a dentist that very successful 3 practices here in South Australia, and they were looking to start up cafes. Purchase existing cafes, and they wanted 300,000. So they used the help of the dentist practice to be able to tap into a new venture. Then we're seeing a lot of movement with probably businesses with turnover. I would say the majority so far have probably been about 5 to 10 mil annual turnover. Is what they're doing is there's a fair bit of movement of directors and shareholders moving out of the business. They want a quick solution to be able to pay up that person really quickly. So we're seeing quite a few of those. And then the final thing that we're seeing a lot of is growth opportunities. So we're coming into the busiest period and the opportunities are definitely out there. Now, as I've mentioned before, there's a sweep of solutions out there in the market, but if someone wants access to the funds quickly, you need to consider solutions that fit that mold. So that's what we're seeing a lot of. So thank you, Lee. I'll let you cover the last couple of slides.
Thanks, Erin. Yeah, appreciate great insights. Look, and I think, look, just from a time perspective, I'm just going to fly through a couple of these next ones. But look, just moving right along, just here's a couple of scenarios, I guess, that we've helped recently. So just please feel free to take a photo of that. Like there's a plumbing business talking about building and trade, and an immigration business, migration business, sorry, trading 5 years. Then also like a conveyancing business. So, anywhere between 16K, 100K, it just, we've got, there's plenty of opportunities out there, guys. Oops, I think, sorry, guys, I'm just going to go back. So, whoops. Okay. I guess just what do we want from you, from our partners? I guess just, and I've got this end of year promotion up there. I'm just going to stop that. I don't know what's happened there, but I think there's a slide missing, but that could be okay. I guess just from, sort of closing off today, I guess, small businesses, as you know, they've been underserved by banks and traditional lenders. And so in the current environment, it's more important than ever to understand the alternative funding solutions available to them. While the government support has boosted awareness of fintechs and non-bank bank lenders like ourselves, many small businesses still don't realise they have options. I guess, as one of the most trusted advisors and offers, and often first, second, or point of call, you guys out there can play a vital role in the education piece, as I mentioned before. Something to think about, the end of year period, and that's now. Historically, we generally see, a huge uplift in volume, thanks to the increase in expenditure and the holiday season brings. Also sees challenges, like I mentioned before, that don't have enough staff, invoices that haven't been paid, inventory shortages, or even those that shut down, like I mentioned before, especially in the building and trade game. These elements drive small business owners to look for funding. Jumping on opportunities like that only come around once a year. So to help maintain cash flow and keep the doors, open and covering operating costs such as rent, wages, utilities, until their trading is back to normal, this is where we can come in and help. Also, thanks to the international travel ban, and the state border lockdowns, well, it's pretty good that they're sort of opening up again. Sorry, Erin, it's been us for a long time. I believe that this is going to drive consumer behaviour a little mad. Think of it as a melting pot, I guess. Millions of people wanting to travel and get away on the annual holidays, itching to spend so much money and enjoying themselves, but have extremely limited location options. I reckon this pent-up need to travel is going to be limited to domestic locations around the country, and no doubt is going to see a huge growth opportunity thanks to the increased foot traffic in respective areas, particularly in coastal towns as well as regional areas. So, this could well be a once-in-a-lifetime chance for SMEs to capture a significant amount of additional revenue. It's a perfect time for businesses to start thinking savvy, including you guys, including us, in getting in a growth mindset, or even just start thinking about how to maintain a strong cash flow position while the business is closed until the next year. And brokers, you are the conduit to the funding they need. So keep referring. And to help keep the referrals coming and SMEs out there humming, we have our end of year campaigns, which have absolutely been a hit thus far. We've got our partner loan. So for you guys out there, if you're looking for a $10,000 line of credit, or where the rate is at 19.95. And look, we're just doing a credit check on that. If you wanted a 20K, and that would be at 14.9 APR, we'd just require bank statements and a credit check on that as well. And then for your clients, we're offering an 8-week deferred repayment promo. So the client is allowing the promo is allowing your clients to take anywhere between 1 and 8 weeks repayments pause. So, and then as Erin mentioned before, the Prosper Plus product has just been absolutely such a success so far. So, and with that, I think, Erin, I don't know if you've mentioned, but we've got a dedicated team focusing on the on that assessment. And typically your client will speak to a credit officer who is a very good person, Andrew Gilmartin, generally taking the calls and being one of us. So, and then one thing that's not on there is we've also got best price guarantee. We're not going to lose a deal to a rate, obviously, and if it's to a competitor also, you know, we want to make sure that we've been given a chance to at least quote. So if you've got a client who's been approved but not settled, you know, from another lender, happy to look at it, as long as you've got the necessary paperwork, and we'll definitely beat it. Guys, that's it from me and Erin. We're just on the right time there. It's been a pleasure presenting to you all, and for a lot of you that I can see on this, your support is always so appreciated. I think there's a great opportunity for us to do some great business and kick some really big goals for the end of 2020. It's been one of those years. Why not finish it off in the best way possible? Again, really hope you enjoyed this session. I'm going to stop sharing the screen and go back into the video there, and then Erin,
I've got a couple of questions. Yeah. So one was around accreditation.
Yep.
So what we'll get Lee to do is, Lee, you mentioned you're going to send a follow-up email for those that aren't fully accredited, just with the accreditation link for everyone. So that way, our accreditation, because we work off a referral model, is only going to take probably 30 seconds to a minute to complete. It's just basic information. And then if you let us know once you've completed it, is what we can do is arrange with head office to have everyone that's on here's accreditation prioritised. So I'll pretty much put you to the top of the queue to have it done. Lee has connections in head office, so that won't be an issue. Now, sorry, Lee.
Erin, I'm just going to go back just to the screen, because share screen, just so we've got our details on there. So, yeah. That's all.
There's no mobiles.
Okay.
But you can email that out anyway.
Yeah,
so that's fine.
Yeah, that's right. Yeah. Well, that's right. So
yeah. Now, just to answer one question, Lee, one of the questions in the chat is around the early payout. So I'll give an example. The way we work is off a fixed term loan. So all interest and the origination fee and the principal is over, let's just say, a 12-month term, and we calculate it all up front and work out what the weekly repayments would be. Now, so let's just say a customer was taking out $100,000 and they paid down $50,000 of the principal amount. So what we would have a look at is what the remaining principal is, which is $50,000, and then the interest component gets reduced down to 1.5% of the 50,000. So with this example here, the interest gets reduced down to only $750. Obviously, if they were in between payments and there's a couple of days interest, they'd have to make sure that's paid as they would for any loan. Now, if you're wanting specific, we could send through some examples. If anyone wants them, just let Lee or I know, and we can show you exactly how it works in a structured graph for you. That might be beneficial for some people as well, Lee.
Sure.
Were there any other? I think there was more questions.
Just having a look. What happened to the sectors who have struggled due to, there's one there from Sam. What happened to the sectors who have struggled due to COVID and a huge decline in sales? Would credit be a bit more lenient? Look towards those sectors, cafes, construction and retails. Great question, Sam, and I'm happy to sort of take the lead on that. From a point of view of us looking at and taking in and getting information to our credit team, we are, in the past, you probably remember, we were looking at 6 months worth of bank statements. So right now we're looking at 12 months worth of bank statements, and especially in Victoria. So we want to see sort of where they were at this time last year. What we'll be looking at is sort of that time between lockdown 1 and lockdown 2. Most, as we understand, most businesses, especially cafes, hospitality industry, they reopened, and we're looking at how they reacted, or what their figures were like between sort of, I think it was, so let's say June and August, for example, and having a look at what that would be. And now obviously having a look at how they've sort of come back to life this last 3 weeks as well. So like I said earlier, there's not something, there's probably the main industry that we probably wouldn't have lent to probably 2 months ago, but again, we are looking at again, was probably the hair and beauty side of things, and the nail, those, nails, I guess. nail salons. So, but mate, to be honest, like I said earlier, right now we're looking at every industry. Probably, we're looking at every industry, and depending on what state they were in, it may be a different lens, but we would never be saying no to any kind of industry out there. So
yeah, and I think it's important to add, Lee, that is what we're doing with the VIC team, Lee, and it was really made a difference at your range. So any application that comes out of Victoria gets individually assessed by a senior person. So we understand what's happened, and we understand there's going to be a decline in sales because it's a reality of what's happened globally. But we're trying to work with our partners to work out ways, how can we approve an application versus how we can decline it. So it will come back. It might take a little bit longer. Obviously, we're very quick generally, but what we're trying to do is seek any strength in an application that we can. I can say South Australia is definitely slightly more ahead because we didn't have that strong lockdown that you guys had the second time round. So for us here, I'm seeing a lot in hospitality, cafes, is what we've noticed here is a lot of them, the business turnover has actually gone up even higher than what it was prior, because a lot of people, when you get told someone can't do something, i.e. you can't eat at a restaurant, everyone wants to eat at a restaurant. Lee spoke about it every single day. So we're seeing a lot of people try and get behind them. So just work with leads so that we can look for ways to be able to approve those applications.
Perfect.
I think you've got more questions coming through.
They're just looking at the chat, so I'm just going, what? Yeah, there's accreditations. Sorry if this is unsecure.
So from Ramesh Ankar, so in regards to starting a new business, so what we need at the moment is we need 12 months of the business trading and the ABN to be registered. That may change. Pre-COVID, we only required 6 months, but we're seeing now we need to look over a longer period to get more consistency in the data. Watch this space. It may change as we start to go back to our new normal, but as of today, it is 12 months. The only thing to keep in mind is that quite often you're seeing, let's say, a fruit and veg shop that are looking for expansion and to set up a new fruit and veg shop at another location. If that's the case, we could tap into the trading entity that's been existing for the longer period to be able to get funds for that new venture. But as of a brand new business, 12 months.
Perfect. Michael, I've seen the, I'll show you sort of what sort of our repayment calculator sort of thing, but I'm happy to show you, send you an example. I'll just see if I can share this bit here.
Maybe send it out after, Lee, one of the calculations.
Yeah, I'll send out an example of what that sort of looks like for sure.
Yeah, so Michael, to answer your question, I guess people can categorize it as different wording. The reason why we don't actually call it a break fee is because it's a fixed term loan. So everything's calculated up front for the small business loan. So the reason why we don't call it a break fee is because we're actually reducing what the client's committed to paying. Similar, if a client, let's just take, I'll use myself as an example. I was looking to refinance some of our loans recently, and I'd done a fixed term at what I thought was a bargain price of 3.99. And when I looked to get out of that for a couple of properties, it actually was going to cost me about $24,000. So, because it's fixed up front, do you know what I mean? I knew what I was going to have to pay. So similar to a comparison like that on the resi side. So when you say, yes, so Jessica, in regards to the 12 months, we don't require tax returns if the client applies between 5,000 and 150. The only time we're going to need financials is if a client wants to apply for more than 150,000.
And
is there any other questions, Lee?
I think we're okay there. I just wanted to, while I can share this, hopefully, can you see that there's, like, just as an example. So can you see that, Erin? Does that come up? Sorry.
Yeah, it's clear on the screen.
It's clear. So for example, there's just an example of what $100,000 would look like if your client was to take the loan out, and there's the early repayment option on the right compared to what it looked like on the left pre October 1, 2020. So
yeah,
take a photo of that, happy to do that. But
Maybe send that out after,
I will
Lee.
send
That
that
might
out,
be
yeah.
beneficial. Yeah.
Yeah, for sure.
Sorry, there's another question as well. Let's go
Yeah.
back to the. I think they're going in between Q&A and chat. Let me go.
Yeah, that's right. That's what. How about JobKeeper?
So JobKeeper, we understand. Oh, you're right. Do you want to
You go. You go. No, that's
fine. So with JobKeeper, we understand the reality of what's happened out there in Australia is JobKeeper was everywhere. So JobKeeper isn't going to affect an application, and as I know with some lenders it can. So with us, JobKeeper is absolutely acceptable. The only thing we can't do is factor it into servicing because we know it's going to stop. So yes, JobKeeper is fine, but it won't increase servicing.
Yeah, perfect. I think, Jess, you asked there, when you say 12 months, is that just 12 months trading, not tax returns? Yes. So typically we're looking at the 12 months of trading bank statements. Anything under 50K is typically it's just 12 months worth of bank statements, depending on, we might ask for some extra information, maybe ATO portal, we might ask for BAS, you know, just depending, but typically that's all we'll ask for anything up to 150K.
Done. I think we're a bit over with time.
Yes.
So,
which I appreciate, guys, for staying on. Guys, like I said, we'll I've taken a recording of this, so happy to send it out. Also, with all the emails and contacts that we've got, I will send. Aaron and I will send this presentation out to you with a few more extra little bits, like that examples of the early payout option. Like I said, guys, you know, opportunities out there are endless. We're, you know, just come out. So hopefully everyone's got a bit of a spring in their step, especially in Melbourne. So happy to help out. Please reach out to Aaron or I with any scenario